Good afternoon. This is Sean Golding with Golding & Golding, here to discuss the basics of the FBAR penalties. For those of you familiar with the FBAR is Foreign Bank Account Reporting. Technically, it's Foreign Bank and Financial Account Reporting, and the name of the form is FinCEN Form 114. FinCEN stands for Financial Crimes Enforcement Network, but don't really try to remove yourself from the crime aspect of it, because there's really nothing criminal about it. So generally what happens is each year, individuals, trusts, estates, corporations who have foreign bank accounts and other financial accounts that meet the threshold for reporting have to file an FBAR. It's filed electronically, and it's due at the same time tax returns are due. In addition, if you go on extension for your tax return, the FBAR goes on automatic extension as well. One important practice point, it doesn't matter whether you have to actually file a tax return. Maybe you're below the threshold for filing taxes. If you're a U.S. person, you meet the foreign account reporting threshold, you still have to file. So what happens if you don't file? You file untimely, you file late, you file incomplete. Well, then you could be subject to something called FBAR penalties. Since FBARs and foreign account compliance in general is a key enforcement priority for the IRS, the penalties can be pretty tough. Even the non-willful FBAR penalties can range from a warning letter in lieu of penalty all the way up to a $10,000 penalty per occurrence per year, generally up to a certain amount. Willful penalties are even worse. With willful penalties, the filer could be subject to a 50% penalty on the maximum unreported balance for the year, up to 100% of the account value if it's a multi-year FBAR penalty situation. The way the IRS enforces the FBAR is also a little bit different. Generally, if it's a tax matter, you go through the process, you get a penalty notice, or there's a tax liability, you may dispute it. You do an appeals at the Court of Appeals, the IRS Office of Appeals. Actually, you do a collection due process hearing. You go through that whole process, and then at the end, you can go to tax court under most circumstances. The FBAR is a little different. The FBAR is an anti-money laundering form originally created by FinCEN, although it's enforced by the IRS. It's covered by Title 31 instead of Title 26 of the code. What all that gibberish means to you is that you cannot fight the FBAR penalties in tax court. Rather, you have to let them sue you and then counterclaim or just defend, or you have to pay it and then sue for refund. If you're out of compliance for FBAR related matters, you may consider entering one of the Amnesty programs. There's several different Amnesty programs available. If you're willful, you're stuck in the voluntary disclosure program. Yes, they did get rid of OVDP, but they have updated the traditional voluntary disclosure program. In addition, if you're non-willful, you may qualify for either the streamlined domestic offshore procedures or streamlined foreign offshore procedures. There's different requirements for either program, different nuances, but at the end of the day, the one key element that permeates through both streamlined programs is non-willfulness. In addition, you may qualify for other alternatives such as delinquency procedures, the delinquent international information return submission procedures, or reasonable cause. Again, my name is Sean Golding with Golding & Golding. We have lots of free resources available on our main website, goldinglawyers.com. We also have a sister website, IRS Streamlined Procedures, devoted exclusively to the Streamlined program. Thank you for your time.